Hi, good afternoon, everybody. Thanks for attending. Today I'm going to take you through the three sections of the Value Line Investment Survey and show you how to get the most out of a subscription to this service. I will show you how to easily keep up to date in regard to your current holdings, as well as how to quickly research and find new stocks that may be a good fit for your portfolio. Speaking of which, I will be recommending a stock for purchase. I'm going to be utilizing www.valueline.com for this presentation, but we'll touch on all of the features of the corresponding print product, since I know that many of you attending today are print subscribers. Just an FYI, all of the features of the hard copy can be found on our website, as well as many other offerings that are available to digital subscribers. Once again, if you have any questions, please type them into the chat box, and I will answer them at the end of the presentation. Before I jump in, I want to first provide some basic information about the Value Line Investment Survey. This service is a unique source of financial information and is designed to help investors make informed investment decisions that fit their individual goals and levels of risk. The product includes data, information, and analysis on more than 1,700 equities that trade on the New York Stock Exchange, NASDAQ, and Toronto Exchange. It also includes economic commentary, easy-to-follow model portfolios, stock screens, industry-based analysis, and much more. This service, which is published weekly, is created by Value Line's research department, which is comprised of more than 70 analysts, economists, data experts, and quantitative specialists. Our research is completely unbiased and independent. Unlike many Wall Street brokerage firms, Value Line has no investment banking business with any company, including the 1,700 that are included in this service. Value Line does not execute trades for its subscribers and, therefore, has no vested interest in whether our subscribers buy, sell, or hold a specific equity. What's more, our staff of professional securities analysts are not permitted to own shares of any company that they cover. I am now going to take you through the sections of the service, and I am hopeful that this will improve your experience with the product. As you can see, I'm currently on our homepage, valueline.com. On this page, you can access daily market commentaries, as well as general interest articles that are written by our analysts. I'm now going to sign in with my username and password. After entering my credentials, I am taken to the welcome screen. From here, I can quickly get to many important areas of our website, including Browse Research, which is the main home for our core equities products. I can also head to the Watch List, Alerts Hub, and Screener Tools sections. This time, however, I'm going to navigate to the dashboard. From the dashboard, I can quickly gain access via the quick links to the three parts of the Value Line Investment Survey: the Summary and Index, Selection and Opinion, and Ratings and Reports. These are the same three sections of the print product. And just like the hard copy, I'm going to start with Part 1, the Summary and Index. Data and analysis, including Value Line's proprietary ranks and ratings, are updated every week for all 1,700 stocks included in the service. A good deal of the information is included in the Summary and Index. The front page contains a table of contents and a list of all the industries we follow in alphabetical order, with the industry rank relative to all other industries in bold. Print subscribers will also want to note that the page number of the industry analysis is on the right. In the middle of the page are three important market statistics. On the left is a median of estimated price-earnings ratios of all stocks with earnings in the survey. The middle box shows the median of estimated dividend yields of all dividend-paying stocks, and the third box contains the estimated median price appreciation potential 3 to 5 years into the future for the 1,700 stocks. By reviewing these statistics each week, a fairly good picture emerges as to how the universe of Value Line stocks is currently being evaluated. Beginning on page 2, the S&I includes an alphabetical listing of all stocks in the publication and includes the most updated ranks, target price ranges, PEs, and dividend information. I'd recommend that each week you check on the stocks in your portfolio so you can discover if anything has materially changed in regard to our thinking and analysis. Please note that rank changes are accompanied by up and down arrows. Toward the back of the S&I, we offer a variety of stock screens that we believe will provide a good starting off point for any investor, particularly those that are actively seeking new holdings. The screens are updated weekly and cover a broad range of investment strategies, including timely stocks and timely industries, conservative stocks, highest yielding stocks, and bargain basement stocks. We suggest that our subscribers review these screens, find the ones that fit their strategy, and then peruse our full reports on the corresponding stocks. I am now going to return to the dashboard and open up part 2 of the Value Line Investment Survey, which is the Selection and Opinion newsletter. In addition to looking over those 3 key market statistics on the front cover of the S&I each week, we suggest that you read Value Line's economic and stock market commentary, which is always on the first page of the S&O. This content provides an overview of what is going on, as well as our take on the future prospects of the economy and stock market. It is written each week by Harvey Katz, our managing editor and chief economist. The weekly Selection and Opinion also provides a host of other information, such as major insider transactions, fixed income yields, and pertinent data about the 1,700 stocks under Value Line review. In addition, the newsletter is commonly filled with stock screens, highlights, special features, and, importantly, the Value Line asset allocation model. This feature is maintained by senior staff and represents Value Line's view of the proper investment allocation in the current market. Value Line's opinion for this model is based only on economic and financial factors. Before considering this allocation, it is important for investors to evaluate their individual goals, investment time horizon, risk preferences, and view of the emotional element or current sentiment in the market. Last, and certainly not least, the S&O is home to Value Line's 4 model portfolios, which are widely popular with our subscribers, particularly those that want a great deal of direction. Simply put, the Value Line Investment Survey provides a huge amount of data and analysis, but some subscribers don't have the time or inclination to dive in and search for stocks that are best suited for them. This is where the model portfolios come in. Each one has a different investment strategy, is actively managed, updated each week, and always contains 20 stocks. The portfolios are overseen by senior research analysts. Portfolio 1, for instance, is best suited for aggressive investors and focuses on stocks that are expected to outperform the broader market over the year ahead. Portfolio 2 should be of interest to more conservative investors and focuses on dividend-paying stocks that also offer worthwhile appreciation potential. Portfolio 3 chooses equities with long-term price growth potential and, of course, is best suited for patient investors. Portfolio 4 is filled with stocks that possess above-average dividend yields and is for investors seeking current income. We have a great number of subscribers that follow these portfolios. For those interested in possibly adopting one of these strategies, here are a few helpful details. New positions always amount to 5% of the market value of the respective portfolio at the time of the trade. Any dividends received are simply taken as cash. They are not reinvested. Lastly, the portfolios are not rebalanced. All told, the model portfolios represent some of Value Line Research Department's best investing ideas, and we recommend that you read the analyst-created content and look over the portfolios for possible additions to your portfolio. Subscribers looking for a total investing solution are also encouraged to check out our monthly stock selection services, Value Line Select, Dividend Income and Growth, and Special Situations. If this is something that sounds up your alley, call 1-800-VALUE-LINE for a free sample report. Before I move on to the ratings and reports section, VLS subscribers also receive a weekly email newsletter each Monday morning. This newsletter, which is written by senior research analysts, include stock highlights, industry analysis, and a fifth model portfolio. The $5 to $15 portfolio, as the name suggests, focuses on stocks that are priced between that range. Just like the 4 model portfolios in the selection and opinion, it is an actively managed 20-stock group. It is updated each week. If you are a VLA subscriber, please be sure that Value Line has your email address on file so you can receive this valuable newsletter. If you are not receiving the investment research email, please call us at 1-800-VALUE-LINE. The third part of the Value Line Investment Survey is the ratings and reports. This section is the core of the service with reports on more than 1,700 stocks and approximately 100 industries. If you already know which stock you want to look up, simply type the company name or ticker into the quote box on the top right of our website. To view all of the stocks that were reviewed this week, click on VLAS Current Issue from the quick links. Another way to get to the VLAS weekly issues is via the traditional online access box, which will interest subscribers that want to recreate the look and feel of the print product. Importantly, the one-page PDF reports are the same as the ones found in the hard copy. As you can see, the 13 weekly issues are listed here. By simply clicking on the desired issue and ratings and reports link, I can pull up a full list of stocks that were updated that week. For this exercise, I'm going to click on issue 1, which is dated February 17th. These are the same 121 stocks that print subscribers received. Let's take a look at a report. For this webinar, I want to direct your attention to Abbott Labs, ticker ABT. It is the opinion of the Value Line Research Department that this stock will make a fine addition to most equity portfolios. From the business blurb in the center of the report, it states that the Illinois headquartered corporation engages in the discovery, development, manufacture, and sale of healthcare-related products. To paraphrase the analyst commentary, which many subscribers consider to be the most important section of our reports, senior analyst Michael Ratty had the following to say about Abbott. The stock, for the most part, has traded in a narrow band over the past couple of years, but we think that it will gradually break out of that pattern to the upside. Our rosy outlook mostly stems from integration benefits of the St. Jude acquisition, as well as product launches in the diagnostics and medical device segments. For 2017, we estimate that ShareNet will reach $2.45, which would represent a year-over-year gain of 11%. As for the stock, as mentioned, we think it will perform well, and it is ranked favorably for both timeliness and safety. An above-average dividend yield further enhances the investment appeal. Most of you are probably already well aware of Value Line's proprietary ratings, which are displayed at the top left of our reports. For more information on these metrics, the investment education section of our website has an entire user guide dedicated to them. I want to take this time to look at some of the important areas of our reports, and I'm going to start with the graph. As you can see, the black price dot is below the dotted cash flow line, which is also commonly referred to as the value line. Simply put, we think that the stock, over time, will reach and track that line, suggesting that ample price appreciation potential is forthcoming. This is also apparent from the projections box on the top left, which shows that Abbott will trade between $60 and $70 by the 2020 to 2022 timeframe. That, coupled with a yield of around 2.5%, and this stock's annual total return potential, especially on a risk-adjusted basis, is quite excellent. If you recall the third market statistic on the front cover of the Summary Index, the median appreciation potential of all 1,700 stocks 3 to 5 years hence is 30%. Abbott's is more than 50%, which doesn't include the dividend. Abbott is also trading at around 18 times our 12-month ShareNet estimate to September 2017, which is more or less in line with its historical performance, as well as the multiple we project to 2020-2022. In this current market, which appears quite expensive, not a lot of stocks can boast that fact. The relative PE of 0.93 shows that Abbott trades at a discount to the overall market. Going back to the favorable risk scenario that we feel is present with Abbott, I want to touch on its price stability score, which is located on the bottom right of our report. This proprietary value line metric is based on a relative ranking of the standard deviation of weekly percent changes in the price of a company's own stock over the last 5 years. Stocks with ranks of 100 represent the most stable, while those with a mark of 5 are the least stable. More conservative investors would obviously want to focus on equities that score near the top of the scale for price stability. Stocks of companies that operate in relatively non-cyclical sectors of the economy and have predictable revenue streams tend to do well in this measure. Notably, price stability is one of the two factors, the other being a company's financial strength rating, that determine a stock's safety rank. In my opinion, with the market trading at an all-time high, most investors would be well served having a percentage of their portfolios in relatively stable issues. To find such stocks, we recommend that interested investors check out some of the screens in the back of the S&I or focus on some of the stocks in our model portfolios, particularly portfolios 2 and 4, which are filled with conservative holdings. Lastly, I want to touch on a few of the tools that our digital subscribers have access to. And these can be found under the Find Ideas tab on our website. Namely, they are the Watch List, Alerts Hub, and Screener functions. A watch list allows you to add stocks so you can see them side by side and compare them, which will help you make an informed investment decision. The Alerts Hub will allow you to be notified when an important event occurs, such as a significant change in price, a change in our ranking, or a change in trading volume, for instance. And the Screener, which I will open and highlight, you can pick fields that are most interested to you, and you can come up with a list of stocks that will meet that criteria. Print subscribers, of course, do not have access to this, and it's a big addition to a digital subscription. Well, that concludes my formal presentation. A few questions came in that I'm going to answer now. The first question was about the model portfolios, and it's what is the annual turnover percentage? On average, Portfolio 1's turnover is about 200% per year. Since the strategy is fairly aggressive and relatively short-term in nature, there are a fair number of trades. Portfolios 2, 3, and 4 have far less turnover, around 50% to 75% per year. You should, of course, take that into account because of trading costs and time. How often are the stocks reviewed in the service? The Value Line Investment Survey is set up on a 13-week cycle. Thus, each stock is fully reviewed with a full-page report coming out 4 times per year. That said, when important information is released outside of the press schedule, we write supplementary reports. These reports are published in the back of each week's ratings and reports, as well as posted on our website. These can also be accessed via the quick links on the dashboard. I'm going to show you that link now. And they're also, like I said, they're also in the print product at the end of the week. How are the stocks chosen for VLIS? We are constantly initiating coverage of new equities to replace those that have been acquired or lack investor appeal. When selecting a stock for inclusion, we consider a variety of factors, including market cap, trading volume, profitability, and business prospects. We do accept subscriber suggestions, so if you're interested in a stock and we don't cover it, please let us know. I can't, however, make any promises that it will be added in short order. Well, that wraps up the presentation and the Q&A. I hope you all found that interesting and worthwhile. And from Value Line, thank you very much.